G'day guys, and welcome to the weekly VEMA Trader Bitcoin analysis. My name is Rhys, and in today's video I'm going to run you guys through the trade that we set up last week. We'll go and see how that played out. Then what we're going to do is we're going to take a look at Bitcoin as it stands today. We'll see what is happening with the price action on the chart, and if there's any trades that we like the look of, we'll set those trades up. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so here we are looking at the trade that we set up last week, and what we were looking for was the close below this $20,800 level. You can see it was acting as really strong support, so we set up a short cross on the alpha trigger to take an entry when it closed below alpha. So we got that. Price did push back up above 20,800, which to be honest worried me a little bit, but there's a reason that you have a stop loss, and especially there's a reason that you don't make your stops super tight. Because we had a decent sized stop loss, price just pushed up, it was no worries. And then we got that rejection. This move down here was what really made me go, yeah, this is what I was expecting to see. This is what I wanted to get into this trade for. I like the look of this trade. Things were going well. Things were going really well. And when we had this big move, the drop down here, I decided to move this stop. So when we first had this rejection, I actually moved the stop down to here, just above that. So that already reduced the risk. But then when we had this big rejection here, well, not a rejection, sorry, this big sell-off there, what I did was I drew in the supply zone, which would have been something like that. It was a pause zone. And then I moved this stop down to just above it. So we will get rid of the initial on that one. That was a stop loss. And that didn't work at all, did it? So that became the stop loss. And things were still looking good. I was still quite happy to be targeting this lower zone. I was expecting us to get to at least 18,000, and we didn't quite get there. We had a really big buyback come all of a sudden. So that was fine. That ended up stopping us out, but that's fine. The stop was in profit, so we walked away with a 0.5% gain on that account. You know, obviously there was quite a lot of profit that we left unrealized, but at the same time, I'm quite happy with where that stop loss was at that time because it was above the most recent market structure. So yeah, you know, there was a huge wick that stopped us out. But at that time, quite happy with where the stop loss was. There's really nothing that I would change about this trade. The thing that I really liked about this trade was this trend line. So that started to form after this rejection. I think I drew it on. And I was posting about this in the Discord, sort of, you know, as I change things, as I move my stop and all that. Because we never had a close above that, there was really no reason for me to consider this whole setup invalid. So it was just this big move here, got wicked out by that. Cool, stopped out in profit. That is a win. So quite happy with this trade at the end of the day. You know, obviously would have liked the actual take profit to be hit, but a 0.5% account gain is always a good thing. It is making money. So that's really it for the trade from last week. Now we'll go and take a look at Bitcoin for the rest of the week. All right, so transitioning from that fantastically smooth segue, we are now looking at the weekly chart. So what I'm really looking at is we are sitting on that $20,000 zone. We've been talking about that for ages. We are respecting the lower of these two zones really nicely, right? You can see that's actually where we wicked into. It's held last week, but last week did close as a bearish engulfing, so that's not a good sign. And because we are sort of starting to consolidate on top of this zone, that makes me think that we may not really see much of a bounce here. Consolidation above support is kind of a bearish signal. It shows buyers aren't stepping in enough to push price back up. It also shows sellers aren't able to push price through. So, you know, it doesn't mean that it's definitely bearish, but to me, consolidation above support has typically resulted in bearish outcomes more often than not. So that sort of makes me think that down might be more likely than up at the moment. If that is the case, then I'm starting to look at about 12,000, anywhere down to sort of 10 and 8, because losing 20,000 is going to seem really, really bearish to a lot of people. So we really could see some sort of capitulation begin if we haven't already seen that. But yeah, those are really the levels that I'm looking at. So, you know, 12,000 has just been a strong EQ. It was sort of the high that once we broke it and then we went and hit 20, really led to the run. Kind of the last lower high. Can't remember whether it was lower high or high high, but kind of the last high we formed before we just went bonanzas. So that is a solid EQ, and then we have supply zones at sort of 10,000 and about 9 to 8,000. So those are really the levels I'm looking at to the downside. I always do that. That tool is the bane of my existence. Really useful, but it always sticks around for a little bit too long. If we do start to see a bounce, there's a supply zone through here, a pause zone, and then that upper one. So the real key zone to me is at 46,000, but we're nowhere near it. It's kind of a useless zone at the moment until we do get near it. So this $29,000 zone is where I'm more interested to if we head to the upside. It probably also lines up with fibs, because this is how things tend to work. There you go. How's that? 38 fib lines up beautifully with the bottom of that. So for me, looking at the weeklies, downside is probably more likely, but still not ruling out a bounce up to that sort of level. On the dailies, I'll be honest, when I first came to this, I actually do record these for the first time that I'm usually looking at the chart for the week. So when I first opened this up, my gut feeling was like gross. Whatever, you know, my subconscious was processing, it really didn't like, and that is bearish in my opinion. You know, it's obviously a bit of a woo-woo way of doing your charting, but I certainly do take into account my gut feeling, right? I have looked at thousands, probably tens of thousands of charts at this point, and yeah, obviously I consciously process a lot. That's what you guys hear, right? You guys hear my conscious thought process, but there is something to be said for that subconscious processing, right? And that's sort of what a gut feel is, or could be, right? To the extent of my knowledge, a gut feel seems to be a subconscious processing of things that you may not consciously sort of realise. But that's a subject for another day. But yeah, that does. It was very interesting to have that experience. So even consciously, the daily candles look bad to me. The fact that we had a mammoth sell-off like that and then barely bounced. So you know, we had a 45% drop, a $14,000 move. The recovery was 25%, $4,000. So, you know, about a third the size. That does not bode well, especially after extended selling, right? We've already been selling for months. So to have quite a small recovery like that really does not look good for Bitcoin right now. Now, we could sit in this range and accumulate and get, you know, some sort of Wyckoff distribution. My brush tool drawings are getting worse and worse, but that's all right. We could get some sort of Wyckoff distribution. It's definitely possible, but right now, going off what I can go off, which is all I can do, looks bad. That is a really, really bad lower high. Now, we have kind of formed a higher low. You know, we could still head back down and not form that, but right now, things are looking... I don't even want to say slightly better, right? Because the overall picture is really bullish. We've just had, what, 1, 2, 3, about 4 candles that make me really bearish. Sorry, we've had about 4 candles that make me go, oh, there might be a little bit of bullish action happening right now. But yeah, so the key levels, 22,000. There is a supply zone there holding us. Now it is a pause zone, but it is a decent pause zone. There was, you know, solid buyback and then a really big rejection. And to the downside, about 17,000. Remains to be seen if that will hold. If we do go down there, you know, if we lose this level and start closing below, about there, then, you know, there might be that capitulation. People might really go, oh no, we're heading down again, and really sell through these zones. Absolutely possible. Could also lead to a Wyckoff spring. I won't get into that because we'll see if it does sort of form a range first, and I can always talk about that next week. But yeah, that's really it for me on the dailies. Downside seems more likely than upside at the moment. Alright, so the 4 hour has a little bit more to talk about. There's been a little bit more action there, which is exactly what you'd expect. You know, obviously there's more 4 hour candles than daily candles, so there's going to be more what you see there. Now, I'll make the case for the bulls first. So what was good to see was we had this buyback and we came back down, and there was a really solid buy up from the 61.8 fib. You can see that it held really nicely in that region all through here, and we've now broken that downtrend that we had formed and have started to head up. So that is good. That's you know, something bullish that we can look at. That said, it doesn't really get me excited. And you know, I am probably every week I probably sound like a perma bear, because to some extent I am a little bit of a perma bear, but I'm especially bearish when daily and weekly timeframes are bearish, and they still are. Nothing's changed there. So even though there is a little bit of excitement and some things happening for the bulls over the last week or so, still nothing really getting me super excited. Even the fact that we came all the way back to the 61.8 fib, I don't view as very bullish. If we come to the 50 or the 38 and kept moving up, that would, you know, get me a little bit more excited. So what we have to consider is, even though we are currently moving up, if we look at the fibs on the move down, we are about to run into that 61.8. So we're currently at the 50 and rejecting a little bit. You know, that's a current candle. Wouldn't really put too much stock into it. But to the upside of where we currently are is the 61.8 fib is a really solid EQ level that's held really well, and in fact is actually where we first held on the enormous move down, right? That 20,800 level, for whatever reason, seems to be a really key level for Bitcoin at the moment. There's also a supply zone that formed there. Now we have wicked up to that before, but there is that zone. And then there's a couple of supply zones above it. So what I see when I look at this is this entire area, to me, looks like an area that there's likely to be considerable selling pressure. And what I think when I see that is, okay, given the daily and the weekly time frame bias that they are super bearish, to me, if we do get up here, I would think a rejection is likely. I would think we would see some sort of a sell-off. I'm not going to set up a trade on that, right? So my traditional trading strategy would be to set up a short from there, or to stagger in from 61 and a couple of those. But because we had this one, and I did catch that on my personal account, because we had that move already, I'm not that interested in that short if we get back up there. I do still think it's likely to hold, but it's just not really a trade that I want to take this week. I'm not interested in longs. I do think there's a chance that we may come back down, retest this, and then bounce, because it's also a reasonably solid level, right? We have an EQ there. We have two supply zones that have formed there. The supply zone that led to the break of this range is there. Those are all things that maybe go, okay, we may bounce from about 19,000, but neither of those trades do I actually want to set up this week, because the long, massively against how I feel the market is doing. I don't want to be taking longs at the moment. The market just feels extremely bearish to me when I consider the daily and the weekly time frames. The short, the ideal short that I would like to set up, has essentially already played out. It was this move here, and I don't want to set that up hoping that it happens a second time. So that's really it for me this week, guys. Let me know how you're going in the market, right? I always love to hear how people are doing. If you head to our Discord, which will be linked in the description, you can see we've been having a trading competition. If you're not getting into the trading competition, you absolutely should be. There's a chance to win months of free VEMA, and all you have to do is post screenshots of your trades, wins, losses, whatever. Just use the VEMA share trade function, and there's prize for the best risk reward, the best description, and then just sort of a lucky draw will pick just a random winner as well. So make sure you're posting in there. It's really interesting to see how different people use VEMA and how different people trade different markets, right? Because I'm taking no trades this week doesn't mean that everyone is not trading this week. You'll find cool things that people are doing in there, and you just see cool different ways that people are using VEMA. I've picked up some really cool tagging strategies from paying attention to what people do in there. So that's it from me. Hope you guys are having a great week. Happy trading, and I'll talk to you very soon.